So when it comes to market players, sometimes we think the retail traders are the ones that move the market, but nah, it's these banks. And the main thing is we also move the market, but just a tiny, 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 tiny bit, right? Collection of retail traders tend to just move the market a tiny bit. I saw one what was it called? It was a is it histogram or whatever graph it is that actually showed the players in this market. As much as we are like millions of retail traders, but we are not even up to 5% of the market movers. That's how crazy it is, right? So, you're gonna for this session here, we'll talk about who moves the market and when they do that, right? When they do that. First of all, um, with that, you need to know the major countries involved here and, of course, their currencies. Yeah. Obviously, the United States, which is, of course, the USD, um, UK, the GBP, um, name them, the European Union, every country in Europe, um, go with the euro. Japan, Japanese yen, JPY, Australia, Australian dollar. The list goes on. Canada, Canadian dollar, Swiss franc, CHF, and New Zealand, NZD. Now, these are the countries. Not all countries are actually um, tradable. You can trade the Nigerian naira, but it's not really, 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 really tradable, right? So the thing is, a currency gets stronger as the country's economy gets stronger, right? This is
Yeah.
DXY, the index of the dollar, right? So now if you observe this index, okay, something. Mhm. If you observe this index, it's like the daily time frame. Uh-huh. Let's even check the monthly time frame of this index. Let's say 1 month time frame. Now this is a monthly time frame of this index. So for the strength from August 2022, comparing the US dollar, yeah, the value
Mm.
in August 2022 is way, way better than it is right now in 2026. So apparently,
Yeah.
you can say that the economy of the US, irrespective of how strong they might seem to look, the economy is going down, right? And the strength of their currency
Yeah.
is going down as well, right? So weak economy gives results to weak currency. Of course, Naira is going down crazily. We know how the Nigerian economy is, all right? So the same thing, right? Now, talking about um yeah, now the major market players, you talk about the banks. Yes, the banks, the baba of them all, and the central banks, right? Central banks
Mhm.
of each country. Yeah, these are like the major players. Talk about the World Bank and other banks. Now, one of the ways they do that is um they control interest rates, right? They control interest rates, and you can see some of this news being released here. These are
Yes.
some of the movements that this the simple thing is banks are there to make money regardless through normal
Yeah.
investments, majorly through trading, yeah, and hedge funds too.
Mhm.
If you, I'm seeing this video, what's it called, Billions, right? It's giving me an insight into what the big players do to make money.
Mm.
That's why I know whatever people rush into, let's say, um, Trump's son, yeah, bought into oil just a week before um, um, the oil price pumped crazily, and that was after I think a bomb blast or something, something, something. All this around ever Strait of Hormuz
Yeah.
issue started here. So one thing about them is that before, in fact, what I learned is that before an information is made public, before you see an information on the news, the main big players has taken advantage of it and taken out their money. So that's
Yeah.
just what it is. So to thrive here on a super good level, it's just that these guys they hold trades for they can count 10% profit as a very good year. Understand? Because the money involved are like billions, right? But we're just interested in that 15 minutes time frame, make our profit within the next 30, 20 minutes or 1 hour, and we're done, right? So, but the thing is, over time, we start, you know, if you have a bank, of course, you like to make crazy money. So the next set of persons are the commercial banks, our usual um um American Express. I think that should be a commercial bank in the US. Our normal First
Yeah.
Bank and the likes over here. Then the third, these are like the hierarchy. Institutions and hedge funds. As I mentioned of hedge funds, these guys they trade huge volumes, right? And they move price aggressively. Then we have corporations as well. Um, these big companies, Apple, Amazon, they trade too. You understand? They are part of the what's it called US 30. Yeah. US 30. These
Yeah.
are like top 30 companies in the US, right? So
Yeah.
they also um move money. Then of course, last is we, the retail traders, right? We trade in our small volume, but the good thing is that we follow the big players. Yeah, that's why we follow the trend. Whatever the big players are doing, our own is to take advantage of their move, right? You cannot see big players trying to get a buy setup, and we are and we are and we want to do otherwise, right?
Yeah.
I'm seeing something right now. It's just something. No, we learn every day actually. So I think I'll talk about that. So, all right, now forest times, yeah, it is also important, yeah. So I believe you know about that. Some persons actually know what forest time is. Yeah, it took me time as well to actually understand that, and that will actually help you um on your trading time or your schedule, your plan, what it is. Now I've chosen to trade just um UK what's it called, New York Open, right? And that's actually when some of these markets move the highest, right? New York,
Yeah.
New York, um, like London, London, of course, our 8 a.m. London 8 a.m. to 5 p.m. moves the highest. New York as well. New York opening moves well, but from their 1 p.m. to as their noon sessions also move the craziest as well. Understand? They also move the craziest. No, 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 no. I'm saying something. Same thing applies here. Same thing applies. Their opening is where the market moves the greatest, right? So one thing is that first runs 24 hours basically, right? If you combine all these sessions together, you're going to see that Tokyo, maybe when you are sleeping, Tokyo is actually running, right? In Nigeria. Yeah,
Yeah.
when you're back in the US, US is running. We over here, we are sleeping, but the market is still running, all right? So
Yeah.
then we also have overlap, right? Overlap towards where London overlaps with New York. No, of course, we can tell that our time here, New York starts by 2:30. And of course, London is still running. London closes by 5 p.m. So those overlap are actually high volatility sessions or high volatility times. Now, if you can see that, you can tell that, okay, something, that's why if you observe from, what's it called? That kind 1 p.m. Sometimes there are surge in the markets 1 hour before
Yeah.
opens. There's some
Market
crazy,
pressure.
yeah, exactly. Surge in the markets. That's like the biggest move. And when you trade gold, trade what's it called? Nasdaq, Dow Jones, that's
Mm-hmm.
US 30. You're gonna see these moves. These are what I've actually um understood over time. So if you're talking about now the best time to trade, well, it's basically that overlap, that London New York overlap, which is when we trade. Understand? And the best short-term opportunities appear there. Right? Now, depending on the time frame you're looking at, you can see a long-term move as well. Right? You can see a long-term move as well. Hmm. Just looking at this market now. I don't know where it's headed to next. So now, when we talk about um, volatility, you know, these markets they move by volatility, they pump in volatility into the market, and I see crazy
Mm-hmm.
surge. You know, now volatility is simply the speed of price movement, right? That's why you can see
Yeah.
on certain days. Let me see if I can go to the 1 minute time frame. On certain days, you can see gold moving. Let me see if I can see some of the longest movements here. All right. This is good moving. Let me see how many from here to here. This is good moving 10. To me, some people call this 100 pips. But for me, I like calling it 10 pips. But this is actually 10 points, right? Good moving 10 points per minute. This is actually large, right? 10 points per minute is so large. In fact, this 10 point with 0.1 with 0.1 lot size, this is $100. With one lot size,
Yeah.
it's $1,000 in just this single,
Good. Yeah.
right?
Yeah.
Even this one is 1, 2, 3, 4. This is 5 minutes. 5 minutes. This is like how many points? 5 minutes, 33. This is massive, right? So imagine catching this 5 minutes, you are making like 33 points. Right? That's like huge, right? It's like 230 pips or 230
Yeah.
goals or three
Yeah.
$300, right? So now the main thing is that high volatility are big moves, of course, more profit opportunities, and the most of all, for every risk, for every reward comes, for greater rewards comes greater risk here.
Mm-hmm.
Is more risky, right? Low volatility, like these zero USDs, all these slow and steady markets, flowing little by little. That's why most people don't trade today. Today's Easter Monday. I believe there should be a bank holiday today, right? So the market moves today won't really be much. So I'm not even looking at the
Yeah.
market today. It's tomorrow that I'm trading basically, right? So that's another thing. Sometimes you want to force setups like on Friday. This should be Friday, right? The market didn't move. So wait, this is a crazy move on Friday. Okay,
I think it closed on Friday. Or it should be Thursday.
is it?
The market was not open on Friday. So the market was not open on Friday since Thursday.
So this is Friday. Wait. This is Friday. Look, I'm on the 1 minute time frame. I was like, uh-huh. This is what a low volatility market is. This is Thursday. This is how crazy it is. Then Friday gave a little crazy. Oh, the market didn't even open at all on Friday. You can see. So this is even Thursday before the kind of thing happened. See how slow. Just imagine how slow this market is on Thursday. How
Yeah.
slow. I was able to make some profits this Friday, but it was in the morning, right? I made my move in the morning, and that was it. That was
Mm-hmm.
out. It gave me what I wanted. I think that was a sell opportunity actually. around in the morning, 9 a.m. Yeah, this is it. Crazy move, boom, got my target, and I was out. Understand? So I just saw the setup, took it, tap out. It was crazy, right? Before the market started making some crazy moves. So summary of all of this is that Forex, the market, I don't know about crypto basically, right? So but the Forex, yeah, are moved by the big players, countries and economies, this whole Iran, Israel, escalations, yeah, affect currencies, right? Sessions also control market movement, overlap, sessions overlap. That's why Asia London overlap also gives opportunities. Now, if you observe, this is good, yeah. If you observe good every 2 a.m., our 2 a.m., right, there's always a surge. In fact, I bet you that this movie is around 2 a.m. Now, let's check it. Okay, this 3 is 2 a.m. now. Okay, this is 2. Oh, You see that? See this long, crazy move. You understand? Every 2 a.m., I've always seen a a surge in the market. Now, if you check out London starts by 8 a.m. That's, New York, what's it called? Not New York. Asian session closes around, I think, 9 a.m. or so. And I'm not so, I don't trade that session. So, but that their overlap around 7. That's why I trade that's why I also trade the 6:30, 6,
Mm-hmm.
session, 6:30 time. That's an overlap. That's actually an overlap of Asian and London. And that's where I get my biggest moves. That short-term move I trade. So if you understand this, you know the best time to trade for yourself. You know,
Mm-hmm.
um, observe, not just trading, observe this movement, see the behaviors of the market. First of all, know whether you can handle the crazy movements of this market. There are some days I wouldn't want to indulge in the crazy move of Dow Jones. I think I'd rather stay
Yeah.
with Nasdaq, right? Um, London sessions here, I can trade DAX, right? But sometimes DAX can be crazy. But the slowest and most FTSE is like that's UK 100. It's like the calmest, just like I don't know how to describe this FTSE. So calm, like so calm. Oh, it's so some days it can be crazy, oh, but it's so calm. Looking for the best animal, let's say a donkey. Donkey's calm. It's so calm. You know, Dow Jones is like trying to tame a lion. I don't know. It's crazy.
Mm-hmm.
Yes. So that's just it. So your assignment, what I'm giving you now is um observe. I know you trade New York. Observe London markets open. That's it. In fact, uh now we are the same time, we have same opening with London, right? So
Yeah.
8 a.m. instead of 9 a.m., right? So our time now is same with London. So it should be 8 a.m. So observe their open. Um, Note the volatility difference. Yeah. Observe the
Yeah.
markets during London Open. And
Yeah.
obviously the time zone is already the same now. Our time and UK time are basically the same. Now, if you're using your laptop,
Mm-hmm.
sometimes if you're confused or you really want to, you can see what tapped here now. This time over here. So let me see if I can see London. You're gonna say that it's plus 1 still. Mm, oh, yeah. See that? +1. Same with us now. Right? So
Mm-hmm.
that is it. So sometimes if you want to do a proper analysis on any time frame, not time frame, on any what's it called? Let's say I want to really focus on New York. When we look at New York Open, they are 9:30 a.m. Okay, you're like, this is New York 9:30 a.m. How is the market by 9:30? How this, how that, how this, how that. This is 9:30. Market open at 9:30, give us it was actually a very good move on Thursday. Boom, give us the breaker. That breaker that I told you. Boom, you bought close at this high, so nice. Understand? But if you also want to relate to it in our own time, you can just give it back to normal levels time. So that's it about big players. So let me look at the market to see what I'm seeing today. I'm really seeing an uptrend. Right? So for today, um, we are seeing market expecting an MVG and it's going up. So I'm expecting this market to kiss back this 4776 area for today. As I'm expecting the market to get. So um, let me see. I'm looking for one particular thing. See if I can spot it. Mm. There's something I saw I'm trying to study. May have time to.
Okay.
So is a high. It's like a market structure shift. That's one. So are we bullish? Haven't done yet. So everything indicates an uptrend. If I'm trading
Yeah.
my 630 is a high also. I'm interested high. Is a low, a higher low, a high. Is a higher low. So I'm saying this guy to take out this one, right? So let me see. Hmm, hmm, what I'm looking for, I'm not seeing it here. So I'm seeing an opportunity right here. Um, a large FVG. So no matter what it is, I know the market will get to this point. That's like what I'm market will get to this point on a 30 minutes time frame. Right. I'm also seeing a high, a low, a lower high, a lower low. Let me see if this has been taken out. This is the last high that gave rise to the lowest point. Has not been taken out still. Right.
Mhm.
So obviously this market will still come down and move up, right? So that's
Mm.
what I'm looking at. But let me see if I can get proper on this. Yeah, it's gonna tap in. There are so many clever gaps here. So many of them. I don't expect it to break this one, though. So, mm, I think, uh, let's watch. There's so many. In fact, sometimes you use replacement to actually know where the market might come into.
Mm.
So I think right now, I think I can only be interested in this market coming into this zone. If it comes in here, that should be my better option. I'm working with this low. This from this point to this highest point, right? This is my 50 zone, right? Like I don't know if I've explained this. You buy below the 50 area and you sell above. So you buy below the 50 mark and you sell above the 50 mark. I call this discount and I call this premium,
Mm.
right? So and this is also the golden zone, the Fibonacci golden zone. This is also the Fibonacci golden
Mm.
zone. the 61.8% mark.
Okay.
So I would rather um I would rather wait for my entry down here. And it's gonna be long. I'd rather wait. That's anywhere around here. Let's stop in here. Have my SL just below this point. Then target is high over here. Let's see how it plays out. Or to be on the safer side, I can just keep the SL down here. So that'll be it. So I'm gonna leave it that way and see how it plays out. That's what I'm looking at. It's already an uptrend. This is 630. The market will come down certainly. Yeah, and as I on the 15 minutes time frame, this is an FVG zone too. So it's
Mm.
quite valid, right? Uh, the FVG. Let me of course you understand the FVG now, right?
Yes.
Yeah,
It was that last time.
exactly. Fair value gap. The gap between two candles. We also have what we call
So the gap, is it the five? You use the 15 minutes for that FPG, or what time frame do you use for that to
this
determine that FPG?
this FVG now. This particular one I'm looking at here is for 15 minutes,
Mm.
right? So somehow
Yeah.
it's in line with my
Mm.
markup, right? It's in line with my markup somehow, right? It's in line with my markup somehow. This is the FVG, this area, right? This and this. This area. But I'm also seeing a double FVG. What do I mean by a double FVG or um um what's it called? There's another name for it. Now a double FVG is a failed FVG, right? You
Okay.
can see this area here, this point and this point. This is supposed to be a bearish FVG, this space right now, but it failed.
Yeah.
Market didn't reverse here, rather the market just broke it and went up.
Yeah.
So there's always a an occurrence in the market that when an FVG fails, right, the market tends to
Mhm.
come back to it to respect it. So there's also a possibility of this market. Now you can see it overlaps another FVG, which is this one and this one and this one. Right. So that they are tiny overlap. If I'm to mark their overlap now, their overlap is here and here. That's a tiny overlap of these two FVGs. Right. There's always a possibility of the market coming to tap into that overlap of these two FVGs. Right. That's sometimes market tends to come in, tap and move. In fact, that's actually why the trade I took on Monday, this is it. Um, it's actually why I took the trade. Right? It's the overlap right here was my target zone, was my target. Market letter sold well anyway, but I was just interested in this overlap. You can see this is several large averaging. Point one, all right, to point two. Then this one, point one to point two. All right. The overlap is this from here to here. All right. So it was actually my TP. I saw that I was like, you know what, any it is, I know that this market will tap into this area, right? I would have stressed more, right? And of course,
Mhm.
take out this other block right here. And you can see maybe the market swept this other block, started buying. That's
Yeah.
this. How would I? Other block is this one, the bullish other block. These are the uh, that's what it is. I gave rise to the strong counter broke off and started buying. So if I extend this, you're gonna see that market just took out this other low, tapped into the low and boom, disappeared aggressively. Right. So I rarely trade other block, but I'm now turning my eyes towards it of late. So that's
Okay.
so now me saying that the market has a potential of getting into this area. Me saying that means I might be shooting myself on the feet. But
Mm-hmm.
but however it is, this is a double
Well, the stop
but
loss,
is it?
but the stop loss is still around the around that range.
Yeah, exactly. That's why I had to drag it down into a safe zone. Because if I've kept it
Mm.
somewhere around here, the market might want to tap into this area. So I drag it down here
Yeah.
into a safe zone. So if the market breaks this low, that means I'm just wrong on the trade. That's just it. I'm just wrong on the
Okay.
trade. It's that simple. Right. Now this is my TP zone now. If I look at it on the 30 minutes time frame or 1 hour time frame, this TP is just a point in this large FVG here. I can decide to shoot for the 50% of this FVG. Like sometimes the market tends to respect the 50% of the FVG move. And that's this mark over here, this point. I decide to target my TP to the 50%. That's half of the FVG. Right. Let me delete this. I use that just to get the 50% back. I decide to drag it to this very point. But I don't really need all that. I just need the tip of the FVG. Just the tip. And I got this very point from which time frame again? So this is 30 minutes. Let me see. Let me get also have other points from that. Okay, yeah. I also got a point from this high right here. So I know for a fact that the market will want to sweep this high. It will. That's the market. It always want to sweep this high. Right. So I want to shoot for much. So that's what I'm expecting this market to do today. Tap into my points, then boom, give me the move. Right? So that's just it. I just it actually.
So,
So that's it for this morning. So I'll simply sit and observe and wait to see how
all
it
right.
goes out later. Right? So let's observe that. I'll watch it. All right. So family, that's it for today. And we'll see you again tomorrow. All right.
All right.
So
That's
yeah.
fine.
Have
Appreciate you.
a blessed day.
You too.
All right. And